Hello everyone, it is Saturday morning, time for the Macro Cafe episode 27. I am your host, The Cowboy. This is Elliott Wave Cafe. Let's get started. Alright, well, welcome. Again, it is Saturday morning. You're going to be seeing this a little bit later today, and we're going to cover the market performance, sectors performance, macro weekly review. We're going to take a look at the US sectors, just a little bit of a touch on the bond yields and the S&P 500 yield, and we're going to take a look at some hot stocks, and then we're going to jump on to some Elliott Wave counts. S&P 500, Dow Jones, transportation, the dollar, the yen, gold, silver, and we're going to finish off with taking a look at the India 50. Yeah, so lots to talk about. It's been a pretty busy week. Once again, volatility is very high. And things are definitely interesting here as we're trying to wrap up the month of October. We're moving into elections in the United States in November. And we have a Federal Reserve meeting. We have CPI coming out. So plenty of things happening in here. But let's take a look at everything. Guys, you can follow me on Twitter, Elliott Wave Cafe right here. The following keeps growing slowly every single week. So thank you for being part of the community there. You guys can come and ask questions, post charts, and anything else you got interesting and you want to talk to me about, you can find me right there. Also, you can find me on my Pro Trading Room. This is on Telegram, so this is the link where you can find me there. I do daily videos, I have presentations, I have market updates every single morning in the afternoon. We have live trades, long-term charts, discussions, chat room, stuff like that. So you guys can come and visit me if you want, and that's the link. All right, let's get going on everything I have for you this morning. We're going to start by taking a look at the performance and at least year to date, right? So we're what is it, about 10 months into this year, almost 11, and you know, the oil market continues to outperform pretty much everything in here. The energy markets were up almost 30% on the USO, closely followed by the dollar index here with almost 18% rally since the beginning of the year. The rest of the markets are in the negative territory in here. You can see gold is down about 10%. Then you're taking a look at the S&P 500, which was down about 25 at its lowest, and it's been pulling back a little bit in here. We're now down about 20%, followed by bonds, which have been completely destroyed. I think this is the largest decline in bonds in history. We are at minus 36% on the TLT. This is 20 plus year treasuries. And then Bitcoin is on the last place here with still about 58% decline. So we'll see if things can change towards the rest of the year. We see a little bit of an increase in the S&P 500. Gold, it's fairly stable. Bonds might just be, you know, hopefully towards the end of the road in here, because we've seen some massive capitulations at the end of the week. But they continue to sell off in here, and you know, we'll take a look and see if energy can continue to outperform as we're pushing the year. But this is the performance. I also wanted to show you what's going on in terms of sector performance as well, where XLE is up about 61% year to date, and is the only sector from the 11 sectors in the S&P 500 that's positive. The rest of them are in the negative territory. You can see that, you know, from XLP I mean, XLC in here, it's the worst communication sector, about 35% down, followed by consumer discretionary with about 30%, and then you have technologies. So everything that gets hurt when you have high interest rates, it's at the bottom, it's the list in here, and a little bit towards the top you have consumer staples, which are acting a little bit better in there. You have you know, healthcare. So some sectors that are still, you know, you're not getting as much of a beating as you are if you're holding, you know, high beta technology, consumer discretionary stuff. So it's been a pretty bad year for that. Energy continues to outperform. I'm actually trying to short it in here. I tried a couple of times. We worked, and then one time it didn't, but it's still a kind of very tough sector to short. So that's kind of where we are. Now, let's jump and take a look at the macro review on the macro weekly. What I usually do is I go over the main important asset classes in here without taking a look at the counts. What I'm following is just where we are in terms of trends, candlestick, a little bit of candlestick analysis, volume, and where we are in relationship with some of these longer term moving averages. I like to look at this every single week to kind of see if there's anything that's jumping out at me in terms of this indicator. So you can notice that the S&P 500 remains above its 200-week moving average. It's fighting to hold above it. We had a small close last week, with a lot of bearish sentiment, we tried to rally on Friday a little bit more, and we closed the week at about 37.52. So pretty interesting close in here. We haven't had a bullish close like this maybe since a few weeks back. This was the last one that was a little bit, if you compare the size in here, you can see that they're kind of similar in there, but this doesn't give me a whole lot of confidence just yet. I mean, we're still in a declining correction, and until some of these larger swing highs get taken out, it's very hard to be super bullish this market. We need to be patient. We need to see this market show a little bit better signs of reversal. The Federal Reserve continues to tighten. Everybody talks about a pause or a pivot, but that really hasn't happened yet. So things are still very, very iffy when it comes to this longer terms. So again, I still think we're in a pretty decent secular bull market with some cyclical sells-offs in here. I think it's probably one of them as well. And as long as you remain above this 2200 in the S&P 500, you can still kind of stay on the bullish side of this move. But again, just a large fight at that 1-day week moving average in here. But on an intermediate basis in here, you're still bearish. You're trading below the 200 week, which is this red line in here. I have it as a 50. You can put it as a 40 as well. It doesn't matter. But we're still kind of declining, and we're still in this kind of bearish trend. So the market will have a tendency to try to sell every single rally. We'll take a look at the counts in here as well shortly. There might be like an ABC bounce. We'll see how long that's going to go before I think the next leg lower begins and tries to finish off a larger corrective pattern. But things are looking fairly decent here on the weekly with a little bit of a bullish move. This might continue into the next week as well, as we're wrapping up the month of October. Now, you take a look at the Nasdaq. It's struggling because it's spent 3 weeks below the 200-week moving average, kind of trying to get back above it on a similar story. The volume here, it's increasing, so that's good to see. But again, just a big downtrend, they're probably going to try to sell it again at about a 10-week moving average as well. So you look at the Nasdaq Composite. This is all the stocks there. This one, it's even weaker. It hasn't even been able to jump back about the 200-week moving average yet. We have a lot more, hot garbage stocks in this index rather than necessarily into the top 100. So that's why it's still kind of struggling, because a lot of those stocks have been taking a heavy beating in here. So still pretty bearish. Take a look at the Dow Jones. Dow Jones, as I was talking last week, it's been outperforming the markets. It's been showing signs of strength. There is a lot of energy in there. There's some healthcare things that have been holding the market, and maybe this is better representative of what's going on in the United States economy, which continues to act pretty strong so far. And it's been outperforming in here. You can see we're closing above its 10-week moving average right there. So we're actually right at the 50-day, right? That's kind of what that is. And we'll see if they're going to try to pause it in here or continue to climb. But definitely a pretty decent outperformance from this market still, until you're actually getting back above the 50-week, about the 40-week. I think that rallies will continue to get sold into this market. So that's 34 2,300. It's the key level to the upside for Dow Jones Industrial. IWM, so the Russell 2000, also has been performing quite well. It hasn't been rallying as strong as the Dow. It hasn't been selling as bad as the Nasdaq, but it's holding this 162 level, 162, 162.5, almost like a double bottom in here. But we're yet to overtake the 200-week moving average. The volume, it's still fairly small. So, you know, it's hard to start to have confidence in this, you know, anything bullish in here until we're getting back above this 200 or 201 level in the Russell. So be very, very careful with that. Bitcoin, it's pretty much going nowhere. The volatility in Bitcoin dropped significantly. I think it got cut in half. We're at about 50 vol, you know, in the options there, and it's still, you know, going pretty much nowhere, right? It's supported at the $20,000 level between 18 and 19K. You're noticing that we're continuing to kind of have bids coming into this market, but overall it's sitting below its 200-week moving average. We got to overtake this, guys, to be able to you know, begin some kind of any kind of bullish narrative into Bitcoin. Otherwise it's very susceptible to another break lower in a 1, 2, 3, some kind of a triangle wave 4, or maybe even if it's a flat with a 5-wave move, there's still a decent chance that this thing could come down below 19K and push lower in one more move. You know, the longer degree of trend here, I'm going to do, I think, a Bitcoin video at the end of next week, I think, because I'm doing them every 4 weeks. So I got to check my schedule on that. But, you know, there's a couple of ways to count this. Possible an ABC flat, you know, just an ABC pullback if we're climbing out of here. So there's multiple ways to look at it. But in terms of momentum, in terms of, you know, any kind of bullish price action, if we got to get back above the 200 day, and we got to get back above 25K, 26K to start to you know, be confident that Bitcoin is actually into some kind of an upward slag. So I'm just kind of holding still in here, not doing much on Bitcoin, just kind of watching the price action and looking for clues. You know, if there is anything, some shorter trading we're trying to do in there, but there is nothing really really big or really successful in any way, because it's been just a very choppy market. So you know, Bitcoin and cryptos in general, it looks like they're trying to base. You know, but there's that risk of one more push lower, and that's still kind of, in my view, still kind of elevated. So that's Bitcoin for you. TLT just completely destroyed. I mean, you can see where this one, it's been one of the hardest weeks in this market, maybe ever since we've actually started to decline, since 172 on TLT. I mean, massive sell-off in here. The volume was a little bit lower on this latest sell-off, so that's a bit surprising. So we might be approaching some kind of a support, and you know, if the yields get to relax a little bit in here, I think that the markets can start to rally. But the bond market is still very, very heavy, and there is you know, there's just high yields. People, you know, start to move more money into market funds, and, you know, they buy treasuries, because you get, and I'll show you this in a second, you get a lot better bang for your buck than to be in anything that's risky, Bitcoin or even stocks, right? I mean, the treasuries are paying you right now about, you know, above 4%. So that's a pretty decent deal that you can get on your cash. Here's the 10-year yield, 421, just a slight pullback at the end of the week in here, but it's a big uptrend. And I don't have a count for you this week, but check the video from last week where I'm looking at this in some kind of a finer third wave, in here, in a 1, 2, 3, 4, and 5 with a larger third, and maybe a fourth wave. It's going to begin forming on the yields, which means that this could provide some relaxation into the markets overall. Dollar index on the weekly time frames, it's still pretty bullish. I mean, we had a couple of inside wicks in here, you know, a big rejection through almost like a hammer candle out of this 10-week moving average. Nothing really panned to the downside as yet. We're getting a little bit of a divergence, but I'm still looking that this is possible, still a fourth wave. Maybe a fourth wave with one more push higher, and then we get more relaxation into the dollar index. I'll show you that onto the counts that I have. But one thing to notice, though, it's pretty extended above its 200-week moving average. I mean, look how far we are. I don't know what the percentage is back in here. We can do the math, but it's quite extended, right? So it needs to slow down and let some of these averages try to catch up a little bit. But extremely bullish trend. I mean, big bullish cross in here, and you know, these are big, large macro trends around the globe. I mean, the dollar market and the currency market, it's multi-trillions of dollars. And when these trends go, you know, they have a hard time stopping. But again, I think the sentiment is also extremely bullish on the US dollar. You have a bunch of magazine covers coming out, probably time that this will try to settle a little bit near current prices, maybe do a fourth wave, and then one more push higher, and then maybe we can get a little bit of a larger correction in the dollar as well, which I continue to talk about. Gold, I have some counts for you. It doesn't look good at all. There might be some upcoming rallies in the gold market, you know, and I have counts for you, but we're weak. We're very weak. We're below the 200-week moving average, pretty far below the 200 as well. It's in a downtrend. It's trying to stabilize here, like the rest of the markets at the 200-week. But it's not looking. I mean, there's nothing in this candlestick formation that tells me, you know, to get bullish gold. I mean, a little bit of a double test of these lows, maybe, you know, that's something important, but nothing to write home about. And then copper again is just fighting to hold this 200-week. There might be some weakness continuing to come because this still looks highly corrective in the copper market. And you have a 1, 2, 1, 2, 3. There's might be another 4, another 5, and a couple of the sequences still lower, which means that you know, the global story is still a little bit iffy. In here, you know, West Texas Intermediate, it's been rejected at the 200-day moving average, and it's not doing much. We had a little bit of a climb. I mean, look how surprising this is, because you're getting XLE and the energy sector continuing to rally while the oil market continues to struggle. So that's an information that I'm not sure what to do with at the moment. I still think oil is slightly bearish, probably going to come towards this 200-week as well, near $65. For right now, you just see a little bit of a rejection out of there, and remains in a pretty decent corrective downtrend in here. And then we're looking at the markets outside the United States and Canada, you know, which have corrected way more than any U.S. markets did. I mean, you know, this is the top before the crash, on the COVID crash, and these markets have been taking those highs, you know, quite a lot. If you look at, you know, emerging markets, if you look at these markets outside of the U.S., right, the sell-off has been way more extended. Dow Jones has barely budged below these levels, and it pulled back. So, you know, we'll see what happens in here, but again, nothing super encouraging from these markets either. Maybe a little bit of a pullback, but they'll continue to sell them into 59, 54, and even slightly higher. And VIX, you know, we have some decent signals from this one, because every time you approach this 35, 36 level, you can see how you're getting knocked back down. No huge explosion into the volatility just yet. So still, you know, let's say a pretty controlled demolition of these markets, with VIX not being able to spike yet, but remaining highly elevated. Okay, really quickly, just a look at the US sectors. I'm going to go through this pretty quick because this video is going to get long. So communication, it's the one that's been beaten down the most. You can see, you know, sitting a lot below its 200-week moving average and the highs before the COVID crash. Hopefully there's some recovery coming into the sector. If you look at the counts in here, they don't look complete to me, unless you go in a 1, 2, 3, but I don't have a full sequence. I gotta spend some time looking at this a little bit more detail, and maybe I'll do this in the program, but it's just, it looks like it's trying to come back, but it's one of the weakest overall, so, you know, it needs a lot to work. XLY, just like, you know, I talked a little bit earlier, you can see it pretty much resembles what's going on in the Russell 2K with this kind of double bottom formation in here below the 200 weeks. So they need to get about some of those levels. Look at XLP. It looks like you have an ABC in here, right? Sits at about 66.18 low. above a trending 200-week moving average in there. Energy is trying to break up higher. In my view, I think that this is probably a B wave. That's kind of how I'm looking at it, with the pretty decent decline in here, and either a B wave or B wave of a larger triangle forming, and maybe with one more push higher. But I'm starting to get slightly negative onto the energy, even though it's showing a lot of strength. XLF bouncing from the 200-week financials. The yield curve is still inverted. It's trying to recover. We had some pretty good earnings from the banks for the last week or so, and like you can look, JP Morgan tried to rally, Morgan Stanley, I think, and some of the others, but again, just rejection from the 10-week moving average, and until you get back above the 50, things are still iffy in my view. Healthcare holding pretty well. You can see the outperformance from healthcare as well. Merck and a lot of these kind of big health care mammoths, they're climbing higher and trying to make new 52-week highs. So it's a defensive sector overall when it comes to high interest rates. You look at XLI in here, holding the 200-week moving average, but still in a pretty deep correction. Materials, not much happening in here. Still above the 200-week. Another weak sector that just sold off. I'm not surprised with upwards of 7% interest rates in the United States here. It's and we had some bad numbers from builders and permits and stuff like that. So they kind of try to crash this up, and you're below the 200-week moving average, right? It's very hard to get long. You can look at XLK holding, bouncing above these levels. A little bit of an encouraging sign this week, but still in a pretty big downtrend. Utilities, just bounce off the 200-week moving average, and is this a flat A, B, C? If it's a flat, we're looking much higher, but I doubt it. It's a sector that I'm not really interested in. It's nothing too exciting happening into that sector. All right, so that's that. Take a quick look at the RRG. So this is basically shows you the strength of some of these sectors. So you can see on the daily time frame, the XLE is losing a bunch of momentum, and that's one of the reasons why I'm trying to short it. It's still outperforming the S&P 500 by quite a bit. I mean, you saw before into the charts I showed on performance, but it's losing momentum every time it's heading south. And still in this leading quadrant, but the momentum scale the momentum scale is getting weaker. You have a little bit of a push here from XLU, XLRE, XLY. It's still underperforming the market quite a bit, and it's a big mess even on some of the outperformance ones. So just a murky picture overall regarding the sectors. I don't have anything interesting here. Let me take a look at the weeklies. And on the weekly time frames, you can see that XLE, it's heading pretty strongly into the upwards direction. So remains one of the favorite sectors. XLF starting to push back in here. So the banks. So if you're looking at the weekly time frames, some of these could look interesting. But who else is coming up? Maybe XLB in here. Materials trying to improve. But XLE remains the biggest sector. So take a look at this. And as they're rotating, next to the S&P 500, you can see who's stronger into the green quadrant and who's heading weaker. XLK, XLRE, and loss of momentum here in the XLU on the weekly time frames. All right, just a quick look at the yields versus the S&P 500. You can see the yield in the S&P 500 is about 1.74 at the moment if you're holding the S&P, and then everything else in terms of treasury yields, it's upwards of 4%, including the 3-month bills, right? So if you're lending the money to the U.S. government, you're getting paid a pretty decent amount at the moment. If you're willing to hold the stuff to maturity, and this is basically what's showing you that cash is obviously king at the moment. It's outperforming stocks, and there's no incentives to hold stocks or hold anything that's high beta or risky. Because that's where the money goes, right? It's starting to move out. The bank reserves are getting diminished day by day. People are shifting money, out of their bank accounts to CDs, to money market funds, to where they can get a little bit of yield in in this market. Even though you have, right, a high CPI, it's still better to get about a 4%, you know, with an 8% CPI with an 8% inflation versus you know, a mere 1.75% into the S&P 500. So that's the story. That's kind of where we are. And until some of these trends start to reverse a little bit and relax, I think it's going to be hard for people to pile into stocks too aggressively. But we'll see what the Fed does, right? That's you know, that's a very important factor in the overall markets. Just really quickly, I want to show you a list of stocks. So these are high beta, high volume, and they have an over $2 billion market cap. These are some of the, you know, not the strongest, but the mostly traded and with the kind of biggest percentage gains and losses that are out there. And you can kind of go through this list at your own convenience and just kind of study it. It's got a, you know, a mixture of stocks from all kind of sectors in here, but it starts with, I mean, this is just an alphabetical order. You can see in here ADT, Alcoa, you've got, you know, look at Square, it's in here, Builders, you've got Caesars, you've got some Carnival Corporation, you got Carvana, which is, you know, straight down in here. So, you know, you got a bunch of energy, you got Cleveland Cliffs, Divan Energy, you got FANG, so a bunch of energy stuff that's high volatility. And then, you know, got Halliburton, you can see, you know, Marathon Oil, MGM, so you got some, you know, leisure entertainment, stuff like that. Cruise lines are in here, you know, gambling and you know, Penn National, Royal Caribbean as well, some more energy, SunPower, so Tesla obviously, because it's a pretty high beta stock. Transocean Rig, it's also another one, US Steel. So if you feel like want to play the options market or you know, sell or buy some of these stocks, you know, this can give decent returns, and they're also obviously risky, but you can kind of go through this one and you know, kind of pick and choose whatever it's interesting. I haven't studied anything. I don't have any tips for you in this list much, but it's something that I'm kind of watching every single day to see, you know, kind of how it's performing, right? So, I mean, this is a pretty interesting setup here in FANG. Looks like it wants to push higher. So anyway, I'll probably talk a little bit more in the pro room about it, and I'll post some charts in there. But a you know, pretty big list with a lot of interesting stocks in here, high beta. Okay, let's jump over and take a look at some. I'm going to come back to this. Let's take a look first at the S&P 500 counts. So this is basically the count that we've been watching for a while in here. And, you know, I talked, I think, last week about the possibility of the market starting to rally a little bit after what it seemed to be a 5-wave decline of this X-wave high. And what we're watching is we're definitely wanting to see, you know, if this turns into some kind of a 1, 2, 3 formation and starts to get a little bit more bullish, or if it's just another ABC based on kind of what I see previously here in this WXYX, because this is an impulse. The only way you can count this bullish is by looking at this whole decline in a wave A, which is kind of hard to do. And then you look at this as a B wave, and then you look at this as a small C wave. And this way, you know, you can make an argument that the correction in the S&P 500 is complete, and you're starting to move higher. But the only way you can get confidence that that's the truth, or somewhat of the truth, is if you start to get back above this X-wave 5, which is again 43.25, and that's what I've said before. You know, when you look at the moving averages, that you want to get back above those levels, right, before you start thinking that the market is actually bullish. Until then, we continue to, you know, we have to go with the larger trend that's in here to the downside. And assume that they're probably going to do an ABC in here for a B wave with the final sell-off in a C of Z of 2 towards 3200 level, and below this 34 level high before the COVID crash started. So that's kind of where we are. It looks like this market is lagging that decline, and you know, it's bouncing a little bit in here. I can take a look at the smaller time frame, and you can see how you have a 1, 2, 3, 4, and 5 out of here, and we're probably doing either a wave, right? 1, 2, 3, 4, and 5, because it needs to stay pretty small. If it gets too large, right, then it's likely that the other count will start to kind of take hold, the ABC count. So either an A wave in here or some kind of a wave W, maybe an ABC. If I go to a smaller time frame, you could see the move in here, maybe an ABC X ABC, and this forms a wave, a complex move out of here, and then you can do another X wave, so you can do a complex or some kind of a triangle forming in here to complete this B wave. So that's kind of what I'm watching. I still think there might be a little bit of upside coming into this market because it's this advance here, guys. It's way too short, right? So if you have a completed pattern in here that took, I don't know, 7 to 8 weeks, whatever this took to the downside, this correction, just get rid of this cursor. This correction in here, it's quite small. So one thing to watch is a climb into this kind of prior fourth wave, right? That if it finishes, let's say, up in there and you're starting to get sell off, that means that this B wave might be just done right there, right? Or you're finding the first resistance in this wave A or a complex move up into fourth, then you sell off in a B or an X or something, and then you push back higher in this B wave. So it just needs to have a little bit more of the right look and the proportion. You could see that this B wave also was a little bit higher. There was another B wave in here, right? And this one is still kind of small. So that's kind of what I'm watching at the smaller time frames. And I talked about this rally last week as well. So this is kind of where we are into the S&P 500, which again, somewhere maybe back towards the trend line, just underneath 4,000. I think it's probably going to have some decent chances that they're going to sell again into it and try to push this market lower one more time. Now this is the ultra bearish count. Let me just save this up. This is the ultra bearish count where you have a multiple of the degrees at the higher trend, primary cycle, super cycle, stuff like that. And then you're looking down in an impulsive move. So again, either a wave 1 or a wave A, either a wave 2 or a wave B, and either a wave 1 at the minor degree or a wave C, right? So it could be an ABC on the bullish side and start to rally if you get back above these levels, or something much, much longer begins in a leading diagonal in a wave 1 up into wave 2 to come, right? Again, towards 38, maybe back towards 4,000 in here. Anything towards about a 38% to a 50% move in the wave 2, and then a much, much bigger crash begins in the market, because that would be a third of a third sell-off that can take the S&P 500 way below 3,000 level, maybe towards 2,800 and even lower. So that's the kind of the bearish, scary stuff that this market could face if we're getting failures after this rally and you're starting to break lower. So think about this, right? If you're not holding, right, if this is instead of a wave B, it's a wave 2, and this wave C becomes very, very aggressive to the downside, then this, larger pattern will start to take hold. So I think the decision, let me save this up, the decision on the market is going to happen, after we sell from here in, what kind of a sell-off we're going to get, and kind of, how it looks once you're approaching and you're breaking below these levels. This is key, how aggressive it will be once you break below 35,000. It will tell us, if it's a much larger third wave decline coming. But if the market, that's what I've said last week, it's a make or break moment for the markets. If you're starting to rally in here, right, you need to continue to go and overtake 43.25. Otherwise, if you're starting to fall apart and break below this 35K, then things can get really, really dangerous for the markets overall. All right, let's take a look at the Dow Jones transports in here, which had a very interesting count. I don't know if I talked to you guys about it. I might have showed my guys in the pro. From 1 to 1, 2, 3, 4, 5, 4, and 5 into 18 to 46. So a nice, decent impulse, followed by what looks to be a pretty interesting, nice correction. Again, back to the lows and the kind of the spike high before the COVID crash in here. And you know, if you look inside this, I didn't put any wave counts on here, so I want you to kind of, you know, study this and see what you can come up with. But pretty decent, beautiful correction happening from this 18 to 46, right? Just a nice, I mean, even if I look at it, you can look at just A, B, C, X, 1, 2, 3, 4, 5, another A, B, C. So you could follow what the rest of the markets are doing, still in a corrective manner, right? But maybe not complete just yet. And then you can always do a middle trend line when you do a channel, and, you know, above that trend line, you can go above towards the top of the channel, and below it, you stay below. But still in a bear market since, you know, the end of last year. Dow Jones Transport's coming into some heavy support, but no signs of any. I mean, it still looks kind of highly corrective, even this move back in here, right, guys? It's hard to get bullish after you see just a little bit of a blip to the upside. So it's the Dow Jones Transports. These you know, they kind of have to start to confirm, and it's part of the Dow theory as well, because they have to confirm what's going on in the Dow Jones Industrial, and you know, the transports are not really confirming that just yet. Then you take a look at the dollar in here, and I'm going to show you some longer term counts. Let me just go to that first, and then I'll come back here. So this is kind of what I put into the program as well. Dollar index on the monthly scale. This July 2001, the high back here was 121.21. And, you know, the count that I have from the lows, it's basically a 1, 2, 1, 2, 3, 4, 5. For a larger third primary, then you do this move in a fourth wave primary, then you sell, then you push higher in this larger fifth. You're approaching the top of this trend line. You're finding resistance back in there. And the question is this move complete, or it could still have a fourth wave and a little bit more to go? So that's kind of where we are on it. I still think this is the valid interpretation on it. It's just a matter of, you know, when will we know that the dollar index is completely done? And for that, you kind of have to break a bill. I think you have to break below 110. If I'm not mistaken, that was the first sell-off that we've had. You know, the major sell-off that happened a couple of weeks ago. And if you break below those levels, I think you can start to secure a little bit better that a fifth wave is in place. And on the UUP, this level is 2960 right there. Right? Until then, you know, it could still be a fourth wave, because it looks like this upward sequence is not complete yet. It looks like you only have a three-wave move in there, you know. So you got the fourth, and then you have a swing, a correction, and then another swing. So that's a three-wave move. You get rid of a sell-off, and you did come into the territory of the wave one, but as a triangle, right? If you stay above those levels, you know, that's still fairly, you know, it's obviously acceptable, and then you can push higher. In one more push to complete a fifth wave. I'm not sure what the levels would be in the dollar index, but just, you know, whatever, maybe 116, 117, something like that, and then we will look for size. But if you start to break below these levels, then it's probably over in the dollar index, and we're looking for further move to the downside. So that's what's going on in the dollar. That's kind of what I'm waiting in here. Right. Dollars in the FIFO. Final wave 5, wave 4 is now unfolding. Below 2960, a top is likely in place. That's one of the notes that I have into the program there. Okay, so that's kind of what we're watching on the dollar. Let me take a look also at the yen, because you know, yen in here, it's a crazy market. I mean, look at this. A, B, and just a relentless move higher. And you all know about what's going on at the Bank of Japan. They basically have yield curve control, and they're trying to keep their yields below 25 basis points, which are the lowest, I think, in the world right now, right? And everything else hurts their currency, right, because of this control of the market. So people took it out on the yen. The yen got very, very weak. And you can see that the ratio between the dollar and the yen climbed to almost, I think it passed 150. And I've had some targets. I was talking in the program that this 153, it's the levels that we need to watch, you know, for a pretty massive reversal lower. There's a confluence of fips here as well. You have equality between wave A and wave C in here. You have some interesting, not interesting, but pretty, I think, pretty accurate subdivisions here into this impulse, into this wave C. And you know, the markets look like they might still do So you have a 1, 2, 3, 4, and 5. But this 5 wave here, it does look like if you go to a 1-day chart, I think that it's a 1, a 2, a 3. They might do a 4 in here, one more push into 153, and then you're going to reverse lower. And both of these, I mean, the Bank of Japan didn't say anything about this move, but I think it was a big intervention from them by manipulating this market. And usually those fail, just like this one did. They manipulated back in here, and we made a new high. So they tried again. But until they're giving up their yield curve control, I don't think yen will sell off too much. However, that's kind of what I'm watching, right? So it's kind of the final stage in here. 3, 4, 1, 2, 3, 4, and a 5th wave. And if it's done, it's done. You obviously kind of have to start to come below these levels in here, 145, 140, and then we'll know that, yen will start to strengthen a little bit more. But definitely, a pretty interesting market with a lot of drama happening lately in here. But that's kind of what I think it's going on in terms of its counting structure, and I wanted you to kind of see it back in here. So 1, 2, the primary degree, and then the intermediate degree, that's primary, and then you go 1, 2 minor, 3, 4, 5, 4, 1, 2, 3, 4, and up in 5. So final stages in here. Because divergence, yeah. It's present. It's not that huge, but it's something. It's there. Okay, so that's what's going on in dollar yen. And what else I have for you guys? I said I was going to talk a little bit about gold and silver, and then we'll talk about India 50. So gold, right here. This is my main view. This is my main chart that I'm watching. So you can see that. There's the gold market is interesting because it's got a couple of scenarios here that I'm watching. You had a double test of this, whatever it was, 1700 or no, 20,000, 2075, yes. And the question is this wave, let's say cycle wave 5 complete in here? Is this move from this lows at 1,000, very close. Come on, you gotta get a little bit lower. I don't know what that low is, maybe 1,040 or something like that. And then you have a wave 1, a 2, a 3, and then either a triangle in 4 with the final push higher in this 5th wave, and you completed the move, and now you're beginning a much larger decline in an A, B, C in here, which is something that, that looks quite appealing, right? Because, the Federal Reserve would have to get into some kind of a very heavy weakening cycle and rate cut cycle for gold to, to perform here and move higher, much higher, above 2,100. I know a lot of people are waiting for a big rally in gold. The charts are just not that pretty. So, the other way is that this is the primary wave 4 back in here, and this whole thing was an A, B, C. So you have a big flat in a 4th wave in gold, and then you rally back to the upside. So that's kind of what we're watching. And the reason that is because this move in here, it looks quite impulsive. And we have a problem with counting the structure, because it's got, so many waves in here, right? It's got 1, 2, 3, 4, 5, 6, 7, 8, so it's a bit hard to come up with the exact count in here. If it's a 9-wave move, that's an impulsive move. If it's a 7, that's a corrective move. So gold has to prove itself here by starting to climb. I mean, if it's an ABC flat, it should not be looking back. It should continue to push higher. If it's an impulse in a wave A, right, that means that it still can correct a little bit higher, but then, it begins a much larger decline. So depending on, which degree of trend we're looking, there might be, some rally coming into the gold and silver market, but it's probably going to find a bunch of resistance above, and they're going to continue to sell it. Now, if it's a wave A, it still seems fairly short, right, based on the larger degree in here, right? So it will be just wave 1 of A, and you're going to win 1, 2, 3, 4, and 5, and maybe this A wave sells even lower. But if it's here, then it's an A. You can do up in B, and then you just kind of have to shorten the timeline, something like that. So keep an eye on this. It's definitely interesting. I don't have you know, a lot of interest in trading gold at the moment due to the you know, to the lack of a clear wave development in here. Right? That's why I don't. I'm not a big fan of kind of how it looks in here. I mean, almost like a double bottom back here. But I mean, look at this, right? 1, 2, 3, 4, 5. This would have been beautiful. So you can have an A or a wave 1, a wave 2, and then you're beginning maybe another 1, 2 back in here, and you can start to you know, you got more room to go to the downside. So it's definitely you know, an interesting market. A lot of overhead supply coming back above 1700. So we'll see what they're going to do next week with it. But that's kind of what I have in the longer time frame, and you know, nothing to really you know, get too excited about the gold market at the moment. So that's what I'm watching here, and then I'm going to show you the silver market as well. And on this one, I have a couple of, so this one is my super bullish count, and it has to prove itself, right? Because if the wave 1 was indeed the beginning of a new trend, wave 2 should stop kind of where we are right now at about, you know, I think we went as low as about 1845 or something like that, and that was the 618 fib from this rally. So if it is, then we have to start to climb higher, and you know, if you get below 1130, that's probably going to be invalid, right? Can you really get bullish in here? It's really tough, because at the smaller time frames, you have basically, let me see if I can correct this for you guys. You know, you still have corrective waves happening in here. I mean, that's just a 3-wave move. So, and this is just a little of a rally that we had on Friday. So it's not something that you want to long based on this pattern. Right, so that's why, I mean, I know this is the 618 in here, and maybe develops into a triangle, one more sell-off lower, and then we bounce, but I don't think it's ready to rally from the way this looks. I think we're getting back below $18 in silver, you know, over the next couple of weeks in here. So anyway, this is the bullish, kind of the bullish scenario that I have, and again, it has to prove itself. If this is the wave too low, then we got to get back, at least back above 24 or 25 in here, right up in there, and then, you know, then I can get behind, you know, because if this was a wave 2, I mean, wave 3 would be massive. It would take us above $50 in silver, right? So there'll be plenty of time for that. But until then, we're still in a big downtrend in here. And here is the bearish count that I have on it. This was top of a wave C. You sell over in A, you have a big flat in here in an A, B, C, right? Because that's pretty impulsive for a B wave. And then you begin a much larger decline lower, you know, 1, 2, 1, 2, and this kind of matches what I think is probably happening into the gold market as well, you know, where we are with the monetary policy and everything. So, you know, do with it what you will, but it's I think it's a highly likely scenario as well, because you're containing this channel. And you're not able to rally. The markets look very weak. I don't know if it's a 1-2, 1-2 necessarily. It could be some kind of a leading, but you know, you're sitting at strong support, right? So you have the 618. You have previous zones where markets were responding pretty well. So it's got all the reasons in the world to rally from here. And if it doesn't and breaks below, I think you're beginning a much larger decline in silver. Okay, that's kind of what I'm thinking. So let's finish up with India 15 here. You know, this market pretty much followed our projections. So it had a pretty good decline in a wave A, in an impulse, and here we are doing a 3-wave rally so far of this A wave low. So this was at 16,589, and we're trading right now at about 17,794 as of the close on Friday. And the question is, if this was a wave 1 impulse, so you finish the wave 2 correction back here, and this is an impulse that finished right into this high, then this is wave A, and an impulse, you're getting a B, you still need to get another sell-off in a wave C for a, let's say for a zigzag. That will come below 16,589 and will complete wave 2 somewhere near below those levels, right? That's kind of the ideal move. Now, if this market continues to climb higher and gets back above 18,096, I think that will confirm that this move from back here was probably a flat, and this was an A B, and a C wave flat. And instead of wave 1 finishing up there, it finished back here. And that's a wave 1. That's a flat in 2, and you're beginning a much larger advance, 1, 2, 3, 4, and 5, and you're making new highs in India. So pay attention to this 18,096, because once we're above those levels, and this, it's this highs as well, X wave and B wave, so I can extend this to the right, back like that, right? And once you get back above those levels, I think that you can continue to go towards 20K. So we're gonna have a pretty big decision here coming up, But my primary kind of interpretation, based on what I see on the rest of the markets, is that there might be some sell-off coming in here as well from this B wave top. So that's kind of what I'm watching first, and then if this market doesn't do that and continues to climb, then we know that likely a new wave up it's beginning. So guys, listen, I appreciate you being here, every single week. Please don't forget to subscribe and like. Visit me in the pro room on Twitter. Be part of the conversation. And as always, thank you for watching, and I will see you next time. Bye bye.